Good morning, traders. This is Tony D from easyMarkets in Sydney. You've seen the first beginnings of a meltdown overnight there in stocks. What we've seen is a little bit of concern here about the delay in the tax plan. So stocks have been overheating for a while now. If you're looking at the S&P and the Dow, let's just bring up the Dow chart for us to have a look here. The Dow is definitely starting to wobble in terms of not making fresh highs, making lower highs, then had that nice little sell-off to break down below some of the lows from last week. We did get a snapback though, so the buyers have not given up completely, but you've got to be really concerned as a buyer. This is a sort of price action that you do see at the end of a trend. So the volatility picks up and then does open the way for a bigger pullback. The story is one of the Republicans is floating the idea of delaying tax reform until 2019. Markets really don't want to hear that. Also, some of the deductions have been lowered, and so there's all in all, they're trying to balance sort of the budget over there, and the original plan was unfunded up to around 1.5 trillion. That was a little bit too much for some Republicans, so you're seeing this alternative plan floating around. Now we'll see how Trump reacts to this because this is the most important piece of legislation he's tried to get through, and if he agrees to water it down, then the stock market, which had been overbought on the anticipation of such drastic corporate tax cuts, may see the recent rally, which had been fairly parabolic, come under pressure. But if you're looking back in the market, you can see this is the first time in a long time here. Especially in the last 45 days. That's the biggest sell-off in the last 60 days, actually, that we've seen in an intraday basis. We just have to see if we get a second day of selling. So a little more information is necessary so the market can actually make an opinion. But the more Republican senators that come out suggesting for less tax cuts, trying to keep the government deficits lower, then the more likely is the stock market will use that as a reason to have a correction, which is surely necessary given the market's overbought nature. One of the most overbought markets in history, actually. So how that plays through, though, because it's a dollar story and it's part of the reason that dollar has been so strong, is the tax cuts and the anticipation of the effect on the economy over there. You've seen dollar yen react quite negatively, and so the selling in dollar yen was pretty sharp overnight, but it didn't really break through that 113 level where the support is. So it has bounced again with stocks, but didn't bounce as much as stocks bounced. So definitely the technical structure in dollar yen is turning more negative. The euro rallied to the middle of 116. This is, it's very hand-in-hand sort of price action. When you get dollar yen selling and it's a US dollar story and the euro rises, that means it is straight up US dollar that's driving this market. The commodity currencies were a little bit more mixed, and you see that the Aussie dollar has struggled here to get past 77. We just had the quarterly SOMP, the quarterly monetary policy update coming through from the RBA. Nothing to see there. That's basically the same update they've had for the last 9 months. Basically, the high Australian dollar complicates the outlook for growth is still in there. Also, they did take note that Sydney house prices have slowed down the housing market. So that's one little bit of interest. But look, unemployment rate is expected to continue to drop as well. So overall, I mean, you are getting to the point where if there is some speed up in inflation, you will see the potential for the RBA to bring forward rate hikes. At the moment, though, end of 2018 is the most likely start time. Alright guys, going forward tonight in the US session, we don't have too much in terms of data to get excited about. There is a little bit of pound manufacturing production numbers coming out, that's the main thing, but the US consumer confidence would be the only other event there. It's actually a bank holiday in America, so it could be actually a quiet into the week. Well, actually, when the markets are on holiday, it's a two-edged sword. There's a lack of liquidity. Alright, so what we're dealing with is 9 times out of 10 there is not much movement, but because of there's not many players. But because there's a lack of liquidity, if there is a news announcement or negative story, then the moves can actually be exacerbated. All right, so low liquidity does not always mean low volatility. Low liquidity generally means that there's not going to be much movement. Most bank holidays like that, but you get a big story on a day where there's a bank holiday, you can see some of the biggest moves in the market because there is just not as many orders out there to fill, and stock futures especially can continue to overextend and exaggerate. All right, traders. Let's if you want to have a bit more of a discussion about that, give us a call on the contact numbers below. If you're not a member of the ATG and you do want to get a dealer like myself or Russell Sanford to assist you with your trading, then come through on the link below. You can join the Easy Markets Active Traders group. Thank you.